like to formally welcome you to our 18th River Capital AGM. 18 years, I've got a few more grey hairs than when we started back in 1996, but it's been a great journey, a journey that I'm very proud of, and I suppose one of the proudest aspects of the journey is the fact that there are some investors here that were with us in 1996 and did invest $100,000 at inception. So that is not just a theoretical outcome. There are some investors who've enjoyed that return, and we're delighted about that. We're delighted about the long-term sustainability of those returns. I put up on the slide there 18 years because some days you feel every minute of the 18 years that we've been doing it, but experience does count. We think it counts for a lot. It means that we've certainly made a lot of mistakes over 18 years. We'll make many more, I'm sure, but hopefully not the same mistakes. So we think experience does stand us in good stead. 2013 I've described as a really solid year across all of our funds. We had the equities business with the growth fund generating a 21% return, and we'll talk about that. The credit fund had another great year at 13%. Total funds under management of the group now over 500 million. And perhaps the most important, in fact not perhaps, the one I'm most proud of is the team is now 20. We're growing strongly. We've got a great team of people, and you're going to get the opportunity tonight to meet a few of the team, and that's perhaps our greatest legacy. And as we continue to grow, continue to develop really great people. What I tend to do at this stage of the AGM is invite Jim Craig, our chairman, just to come up and say a few words. Jim's now been with us for 3 years. At close quarters, may be able to make an interesting observation or two, an insight into working at close quarters with the River Capital Group. So, Jim Craig.
Thank you, Barry. Over the last 3 years, each year I've spoken about River Capital's culture, and it's really that investor-first focus in the culture that I regard as remarkable. I had 2 clear examples of it this year that I wanted to share with you. The first one was I was in another board meeting for a fund management group, and the fund management group was delighted because in a month that the market had fallen 4.2%, they'd only fallen 2%. I came back to River Capital and they were pulling their hair out about the fact that they had fallen 2.1%. And the stark contrast of how much they felt for, losing money compared to relative performance really hit me. The other story was one from being on the other side of a transaction. I was involved with a small company raising $36 million. And we raised it from 8 institutional investors, including River Capital. So it was quite instructive to see how River Capital goes about making its investment decisions compared to other institutional investors. Now, a lot of those investors made decisions very quickly, simply based off the presentation. 3 or 4 of them did detailed due diligence. And I asked the company at the end of the process, what did River Capital do that was different compared to the other investors? They really said the key was that they were totally focused on why the business model worked for the customer and whether or not it really would work in the long run. They weren't really interested in next year's numbers. They weren't that interested in how it compared to other business models. It was, is this a good business that we want our investors to invest in for the long run? Barry also asked me to talk about the chairman and the board's role in River Capital. I guess we see ourselves as having a couple of roles. The first is the core governance role, making sure that custody, making sure that reporting, making sure that the fundamentals of looking after your money are well managed. And we spend some of our time doing that as a board. The second thing that our board does, and Tony's here, Tony and I sit on the investment committee for the credit fund. We go through in great detail every credit fund proposal, and Josh will talk today about the types of things we've been doing. And the final thing that I personally do is bring an infrastructure perspective to some of the investments across both the growth fund and the credit fund. The final thing I wanted to talk about very briefly is growth and sustainability for this business, and as investors in our funds, being aware of how we approach it. In terms of growth, key to growth in our business is people. We're delighted that Andrew Lally has joined us. Andrew's brought some greater credit skills, allowed us to make some investments, and he'll talk about it, that we couldn't have made before. We're also delighted that Silvo has rejoined us, to bring back that expertise after having seen the other side of the fence is very valuable. And it's that growth that continues to provide us with ideas to invest your money. Final thing in terms of growth and sustainability, and we've spoken to a number of our investors about it, is the possibility of new investments, new areas, and the trick from our perspective in balancing that is making sure that we stay very, very focused on our core, what we actually do, that we don't get distracted, but there are occasions where we think we can leverage the skills that we've developed to provide you with better returns. So we look at lots of things, but we're very disciplined about what we will actually offer you. So, thank you.